We're going to take a look at SPX on multiple time frames. Welcome everybody to Option Center. If you're new here, go down to that bottom right hand corner, hit that Option Center logo and subscribe. Thanks for all the support here. So let's dive right into it. We have SPX on the monthly time frame. We might check out VIX as well if we have time. We're doing a quick update for before the weekend, and then we can do more in depth later on. We have SPX on the monthly time frame. We have this consolidation area that we highlighted. We're still within there, but checking out what's happening right now, we have this reversal candle. If you look up top on that card, that's the video that I put the two signals that were very bearish on the market. So we're getting some follow through here. The month is young. We still have plenty of time, so we'll have to just monitor that. But the reversals so far, so good. Okay, and on this weekly time frame, we have this channel that we had drawn here. We broke underneath this channel. This is a heavy sell signal. So no matter, I'm trying to get all these touches here on that, and we broke down and closed a weekly close underneath that channel top. You have the breakdown of this large wedge. I see with this monthly close going into next week, we'll probably see this being a crossover. So that's very bearish. We had this downtrend line here that the MACD came to, and we're making a crossover. So what do I expect? If this does follow through like I think it does, well, first of all, we'll be looking at this 3,500 to 3,200 area. That should bring us right back down to the bottom of this channel. It's going to take a little bit of time, but not as much time as you probably think. We're probably going to get some hefty candles here with some touches. Intraday, we'll get some slowdowns, some reactions from like the 200 week, from the 50% coinciding with the bottom here, things like that. So, but the close of each day and week should be pretty bearish. You might get a pause week somewhere in there, and then if you get a pause week, then you better expect the week after to be very bearish, a big follow through. Okay. Also with the MACD, I expect this. If we get this crossover, then I do expect us to make lows. And when we make those lows, perhaps down here to the bottom of the channel, then we should probably hit the bottom of this triangle. We're going to triangulate in here, and that's going to form a divergence, a positive divergence. And so we should expect some sort of pop around this area. If not, that would be pretty extreme. Okay, let me go to the daily time frame. And don't forget to like these videos. I appreciate it. It helps us get these videos out to other people and help other traders. All right. This rising wedge broke down, back test, follow through. All right. Back into the channel underneath major support here. And we're kind of just getting a little reaction off of this holiday trade from December. And, you know, that forms a little bit of a shelf, a volume shelf there, so you can see a reaction. I don't think it's going to stop the progress, but I think that's why we had that little tiny bounce today. People thought we were going to rage to the upside, and I just don't see that happening. If we do, for some reason, get a larger bounce than I think, then we should probably just be back testing this downtrend line, and then that's another trade setup for the downside. All right, and you can see the area right here. We get down, close this gap, then we have good support here for reaction, and then I expect this to be our next zone to trade into. Okay, jumping on that 65-minute, and then we'll check out the VIX to end this, so stick around. All right, on the 65-minute chart, you can just see a better view of what's happening. I'm going to adjust all these supports, and we broke underneath that 3,900 area. So our next short term will be the 3,800 before we get a little bit of reaction here, and then so on and so forth. We trade level to level, okay? Level to level. There's no divergence yet. We're just a touch overbought, but or oversold. Excuse me, but there's no divergences. I don't suspect any real big moves to the upside yet. So we kept on our puts. We took our profits on a real short term put plays, but yeah. Just a real quick, I'll show you our Elliott Wave, what we're actually looking for. If this wave 1 and 2 plays out the way we think it's going to, if this is a full 1-2, and even if not, if this is a 1-2-1-2, then we're at least looking down to that 3,700 area for the wave 3 to produce, which would mean the 1-2 right here would be a 1-2, possibly 1, 2, 3, 4, 5, all the way into the 3,700 area. Okay, so that's just a projection for a wave 3. It's pretty typical. Whether you count it from up here, which would be 3,650, or right here, which would be 3,700. So either way, we're looking further to the downside. Check out the VIX, and we're gonna need to go on a daily for this one. Just a hard move from the VIX. I mean, that is a move that it looks breakout worthy. Look at the difference between this move compared to all the other jagged moves to the upside. Okay, let's give ourselves a little bit more time here. Going into, let's go to 5 years and look at this. I mean, similarities. Finally got a massive move here, pullback, and then a real sharp move all the way up to the 85 area. Now this is triangulating, and we break this triangle, and then we have a 35 area, and above that is nothing but blue skies. So we could easily get to 100 if this plays out. Imagine, look at the size of this move here. Though we reacted very sharply off of it, we didn't bounce very much. So if we start to get some moving up here, that huge move didn't even take us to the lows. Okay, in the SPX, didn't even take us to the lows. Let's go back here. Yeah, there's fear. There is fear in the market. That's just this low here. All right, and that I know that's a big low. That means that we're probably gonna take out this low. If we take this one out, then we're probably going to take this one out. But that's it. We came down a couple hundred points, and the VIX just ripped. So if that VIX breaks out, we don't need the dollar. We don't need bonds, even though bonds made a sharp move. We don't need those to move with the VIX just ripping like that. What's happening is the bonds are everybody looks at the bonds, the rates going up, taking it on the market. Well, any sharp move in the bonds, it doesn't matter which way, if it's moving hard, it's going to affect a major sector of the market. And so that's why the banks were just getting trashed, is because the rates were dropping so hard. The money was flowing into bonds. It's a safety trade. When it moves large, if it's just moving back and forth, oscillating or trending to the upside or trending to the downside, it's not a big deal. But when you start getting massive moves like this, it's gonna tear down the financials. The market's gonna have fear in it. VIX is another fear meter, so you don't need the dollar to move that much if something else is moving the market. All right, that's my rant. Okay, if you like this, don't forget to like the video. And hit the notification button. We do videos so often. I had a trade earlier for NVIDIA that I decided to put out on this platform. And check out the other ones in the description, where you could check out some other places that I place trades. And I don't like to say the names because for some reason, when I do mention, I think the algorithms mess up with Google here and YouTube, and it slows down the production of these videos here. But I'll stop ranting on. Thanks for visiting us here at Option Center. Have a wonderful weekend.